Hello everyone, welcome to Educare 247. This is the 10th lecture of Financial Awareness series. This series is very much useful for RBI Grade B and SEBI Grade A examination. In our 10th lecture, we will be discussing what is bad bank. Basically, bad bank doesn't mean corrupt bank, but in this video, we'll understand the different parameters of the bad bank, what are the challenges of bad bank, and how feasible bad bank in Indian context. So this video is going to be very exciting and very insightful. Educare 247 has launched comprehensive course for RBI Grade B examination 2020. This comprehensive course is useful for phase 1, phase 2 and interview, and this is the full video course. We are covering all the subjects related to RBI Grade B examination like economy and social issues, finance and management, current affairs and general awareness, quant, logical reasoning, general English, descriptive English, and all the subjects will be covered in the form of video lectures. Notes will be also provided and 10,000 plus MCQs will be provided. Latest current affairs will be updated in the course. Yojana and Kurukshetra magazine will be covered in this course. Important government schemes will be covered in this course. RBI circular will be covered in this course. 10 phase 1 test and 5 phase 2 mock test will be there. Descriptive English mock test will be there, and the student who will clear phase 2 examination, they will get the chance for mock interview session. So this is the comprehensive package for RBI Grade B examination, and the course fee is 3999. Basically the course fees is 4999, but right now on our website we are running a discount. You don't have to use any coupon code. Directly you can visit Educare 247 and get the discount and subscribe this very important course for RBI Grade B examination. Let us understand why we are discussing bad bank. What is the context of bad bank? Basically, COVID-19 pandemic has slowed down the economic activities and it may lead to a hike in non-performing asset. Before the lockdown, the gross NPAs fell below rupees 10 lakh crore, but according to recent crisis report, at the end of this fiscal year, the NPAs can cross to rupees 11 lakh. So only in this fiscal year, almost 1 lakh crore NPAs can be generated. And after that, Indian Bank Association has refloated the old idea of creating a bad bank. It was first discussed in Economic Survey 2017. That time, it was suggested that a public sector asset rehabilitation agency, PARA, can be created and it will solve the problem of NPAs. After that, our finance minister Piyush Goyal has set up a committee under PNB chairman Sunil Mehta to study the feasibility of National Asset Reconstruction Company. So far, we have not heard anything from the government regarding bad bank. But now, Indian Bank Association has refloated the idea, so some discussion can happen on this and some decision can be made on this. Let us understand what is bad bank and what are the challenges of bad bank. Technically, a bad bank is an asset reconstruction company that buys bad loan from the commercial banks at a discount rate and tries to recover that money from the defaulter over a period of time in a systematic manner. They provide some systematic solution to get the money. So basically the idea of bad bank seeks to reduce the NPAs in the banking sector so that they can revive the lending and credit growth will happen. Either this kind of bank is feasible or not, many economists have debated on the same. We'll also analyze the rationale behind the bad bank. If bad bank is observing some NPAs, it will ease the provisioning requirement for the bank and they can start the lending. If bank has high amount of NPAs, the lending will be difficult because they have to keep some supplementary capital according to Basel Accord, so they cannot lend much, their business will suffer. But if some bank can absorb some NPAs, they have the quality asset and they can revive their lending. So first rationale is easing provisioning requirement. It will be easy for bank to revive their business in case some loans are going wrong. The another important point is this kind of bank will reassure the trust among the customers. If this kind of bank will be created, it will segregate the bad asset from the good assets. They will take the bad assets and bank will have the good assets. It means the investor can easily track the financial health of their assets, and it will attract the investors more. They will have more confidence in the banking system, and they will have the confidence that their assets are safe. What are the international provision regarding this? After 2008 crisis, the US has passed a bill, Emergency Economic Stabilization Act of 2008. In this act, the bad bank was suggested to address the subprime mortgages crisis. In Ireland, National Asset Management Agency was established in 2009. Many other countries have the bad bank kind of agency which takes the bad assets from the bank. So India can also think about the same. The another important rationale behind bad bank is concerned about insolvency and bankruptcy code. If lenders are resolving their problem through insolvency and bankruptcy code, they are facing huge haircuts, and some problem cannot be resolved with IBC system like power sector problem. For that, they need some kind of bank which can purchase their bad assets. So basically, for the time being, they can park their money to separate agency to find a solution in a long term. So this is very good reasoning for the creation of bad bank. It will help industry, especially their problem cannot be solved with the help of IBC. Those industries are very much interested in this kind of bank. Let us understand what possible challenges a bad bank can face. The first important challenge could be mobilizing capital in the bad market. Currently, the economic activity is not picking up, and finding a buyer for bad assets will be very difficult. The second important point is it will not address the underlying issues related to public sector bank. If you will see the NPAs number, 86% of NPAs is related to public sector bank. Because of their poor governance, they have lent badly and they have not improved their governance. So this problem will be as it is. They will again start piling up the loans if there will be a bad bank, because they have the idea, okay, their bad asset can go somewhere else. So it is like shifting loans from one government packet to another, and this is not a sustainable model. The third important point is provisioning issues tackled through recapitalization. In last few years, the government has infused almost 2.6 lakh crore in banks through recapitalization, and this is the real problem solving technique. So this issue will be not taken care of if bad bank is there. And the fourth important point is market related issues. Okay, if the asset will be transferred from commercial bank to bad bank, that will not be on the market price and price discovery will not happen. So this is not the good practice. The fifth important point is it's a moral hazard. RBI former governor Raghuram Rajan has said that bad bank may create a moral hazard and enable bank to continue reckless lending practices without any commitment to reduce NPA. So basically it will create a moral hazard. It will not make bank accountable and they will continue with their reckless practices. So these are the challenges related to bad bank. Hope you have enjoyed the video. If you have enjoyed the video, like, share and comment and subscribe to Educare 247. Thank you and happy learning.